So, good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, dated February 8, 2023. So, before we go ahead, I would like to give a small disclaimer that any stock, any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. So, without taking up much time, I'll start with Nifty 50s chart analysis for the day and for the past few days as well. So, talking about the last few days, you can see that Nifty was probably range bound between your 200 DMA and the 21 DMA at the moment. And talking about first about the budget session, you could see initially Nifty going higher, but finding resistance around the 21 DMA and probably repulsing from there and making a new low during the day. And then it ended somewhere in the middle of the candle, which was probably a very indecisive candle. Probably after that, Nifty tried to move higher. During this session, we marked Nifty to a downtrend. Why? Because the previous lows got undercut. That's why it was marked to a downtrend. This was day one, this was day two, and this was day three. And yesterday, talking about this, not yesterday, day before yesterday, that was the Monday, we moved the market to a rally attempt. So from a rally attempt, you would like to see a follow through day that is an up move of 1.5% on higher uh, to take the markets to a confirmed uptrend. As you can see, on the broader ranges, you can see your 18,000 or 17,900, probably the 21 DMA is acting as a strong resistance. And on the lower end, the 17,300, 17,350 levels is acting as a strong support. That is a very broader range if we talk about for Nifty. On a narrower range, if we look at it, resistance continues to remain on around the 17,900, 17,950 levels, 18,000 levels. But on the lower end, it's around 70,700, 17,750. If Nifty is able to reclaim this 21 DMA and 50 DMA going forward with volumes, probably volumes are coming in because of the volatility that we've been seeing in uh, uh, before your 50 DMA, even your 10 WMA gets reclaimed, according to William O'Neill, the buy switch can get turned on. So you can see some kind of additions happening into the model portfolio. Talking about key news, your result season is still going on. And if you talk about one of the results, Astral did report its result and the revenue grew by 50%. However, you can see your margin contractions for the company at 3.2% YOY, unable to pass on the higher raw material costs. If you talk about on the YOY front, and similarly, your EBITDA also slowed down. All of these numbers was below the consensus estimates. You can see some negative reaction for the stock today. The other one was Deepak Nitrite, which again failed to probably live up to the expectation. The overall long-term outlook across the business segments do remain positive, but for the current quarter, it was kind of a miss. If we talk about the revenue grew by around 15.6% YOY, EBITDA was down 10.6% YOY, and margins contracted by 4.6% to 15.8%. Hero Motoco did beat its earning estimate, so you can see some kind of positive reaction for Hero Motoco going forward during the current session. PAT grew by 6.3% YOY, revenue grew 1.9% YOY. However, margins did contract by 70 bips YOY to 11.5%. Talking about the other results, your Thermax grew, the revenue grew by 27% YOY to 2,049 crores. PAT increased by 58.8% YOY, and even the margins expanded 90 pips YOY. Talking about your other result, NHPC, your revenue grew by 20% YOY, PAT declined 17% YOY, and margins expanded 430 pips YOY to 66%. Uh, the companies that are expected to come out with the result today is Shree Cement, Adani Power, Adani Wilmar, Cummins, Escorts, Kubota, Econ, Minda Corporation, Narayana, Ridale, Oberoi Realty, Piramal Enterprise, and others are expected to announce their Q3 earnings today. However, if we talk about the most important one, it's not a result, but it's probably on the macro front, the most important thing for India in terms of your monetary policy is your RBI monetary policy meeting today, and there is an expectation of a 25 bips rate hike. Talking about the global market update, the Dow Jones increased by 0.8%, your S&P 500 by 1.3%, Nasdaq Composite by 1.9%. After probably some decline over the last few sessions, it was kind of a reversal across the three indices in the US market. However, if we talk about on the Asian front, it is kind of a mixed reaction. As you can see, Shanghai was trading flat, Nikkei is trading down by 0.5%, and Kospi is trading higher by 1.3%. If we talk about from the SGX Nifty's front, SGX Nifty is indicating a positive opening of around 60 to 70 points. The last trade at around 8:35 a.m. for SGX Nifty was around 17,793, around 65 to 70% higher than your yesterday's close. Talking about the chart of the day for us is Cera Sanitaryware. And before we go ahead, I would like to give a small disclaimer that it's not a buy or sell recommendation at the moment. One, probably the market is still in rally attempt. It's still below the key moving averages. And two, the stock isn't in the ideal buy zone yet. So talking about the recent results, if we talk about it, that is the Q3 FY23 results. It did report a very good performance on the revenue, on the operating margins front. And overall, if we talk about from the outlook given by the management, the company is expecting had guided a revenue increase of had planned to its three double its revenue in 3.5 years, starting from FY22, with significant increase presence in your sanitary ware and your faucet wares, and improving its EBITDA margins by 50 to 75 bips every year. And probably you can see that happening in the current quarter as well. The revenue growth was around 17.8% YOY on the standalone front, and the sanitary ware and the faucet ware revenue grew by around 19 and 12% YOY. If we talk about from the operating margin front, the operating margin front did expand 20 bips YOY. It was flat QOQ to 16% due to lower raw material costs, but partially negated by higher other expenses. So overall, the result was very good. If one talks about it, the guidance for the company remains really strong. Now let's talk it from the William O'Neill perspective. So last few quarters, probably 8 to 9 quarters, have been splendid for the company. And similarly, if you look at the guidance for the company, that is for 23, that is full year FY23, 24, and 25, the EPS guidance or the EPS growth guidance is consistently above the 20% mark, which is a really good sign. Similarly, can be seen for the last quarter, you can see slight increase in the number of fund holdings as well for the stock, probably on improving growth and margin outlook for the company. And if you look at uh, the scores or the master score remains robust at 64. Similarly, the EPS rating is very good at 86. The factors for the growth in EPS ratings or the robust EPS rating we've already discussed. Price rating is very good at 76, and your buyer demand is very strong at B. If you look at on the technical front, if you look at it, you can see good accumulation on the right hand side of the base with your RS line moving higher. The stock is forming a 1B base, 1B cup base, and going forward, if market reclaims its key moving averages or a follow through day is staged, and the stock moves higher on above average volumes and breaks out the pivot, that is, the pivot is still 5% from the current levels, then it can be a good stock to watch out for and probably to add it into the portfolio as well. So thank you, and that's it from my side. And stay tuned, stay connected to this space of Prebell with William O'Neill India at 8:45 am sharp from Monday to Friday. And do connect with us on the Stock Darbar session on February 9th, 4:30 p.m. And thank you.